My guest today is Dave Weisberger. Dave is the co-founder and CEO or co-CEO at CoinRoutes, a leading provider of algorithmic trading strategies and execution management. Welcome to the show, Dave.
Oh, thank you, Andy. I'm happy to be here.
Happy to have you here, Dave. Let's do what we do at the beginning of the show. It would be great if you could please introduce yourself. I'd love to hear just a little bit of your personal and a professional backstory. What have you been doing in the lead up to becoming, co-founding CoinRoutes?
So it's interesting story. You can tell from the beard that I've been around a while. I started a long time ago in traditional finance, building program trading systems, actually, and ultimately starting Solomon Brothers back in the day. There's a dinosaur word for you, a global program trading desk, and migrating my way through many things in automation, from building some of the first algorithms on Wall Street to then ultimately going to a hedge fund called Two Sigma to run Two Sigma Securities and run global market making. So most of my career was spent doing algorithmic trading, proprietary trading, market making, program trading. And around 6 years ago, I found myself looking for a new opportunity after, at that point in early 17. And Ian Weisberger, who's the other co-founder and co-CEO, my partner at CoinRoutes, had the idea to build a company to help people navigate the crypto markets because it's pretty damn complicated. And CoinRoutes has been growing and building ever since. We started, with basic CeFi, and now we have liquidity providers and CeFi exchanges and DeFi exchanges and a full suite of software and services around that.
Yes, indeed. I can see you do indeed have that full suite of products. So it'd be useful then, Dave, just to understand who you're aiming this at. Is CoinRoutes aimed at, is it for investors or is it more specifically for traders, crypto natives? Who's the target audience? I'm sure there are a few different buckets, if you like, but yeah, describe some of the customer segments you're hoping to meet.
Yeah, our customer segment is traders. If you're an investor and you're going to buy and you're going to hodl for 3 years and that you put your money in, I mean, maybe you might make one trade that's big enough to be worth using a system because we could save a fair amount of money. But the truth is our clients are traders, and specifically people with significant turnover. I mean, 10, 20 million a month is kind of at the low end of dollars value of trading turnover that are our customers. To put this in perspective, we had our record month last month, like a lot of people did. Our clients traded north of $11 billion through the platform last month. So, there's a fair amount of trading going on. But we are changing our audience over the course of 2024. We've been mostly what you would call a professional institutional product, and now we're moving into professional, just active trader products. And so we've debuted a new DeFi protocol where you can use our system to sign one transaction with a credit limit and then trade on Uniswap, for example, in and out all day long algorithmically, which is something that very few people have done. And actually to bring algorithmic trading to DeFi is something that's new. And we're following this up by creating more broad platforms for individuals. But the reality is that's still a little bit of ways to go, because there's a big difference between a white glove help our client service, which we provide with 24-hour support and 24/7 uptime, and having a fully automated system that can handle remote traders that don't talk to anybody here. So we are in the process of evolving that audience.
Yeah, well, that sounds good. And look at, it says here in my notes that you support trading for over 3,600 spot and derivative instruments across 60 major exchanges and liquidity providers. So that covers a broad spectrum of the crypto markets, I imagine, Dave.
Yeah, I mean, look, we pretty much connect to any source of liquidity that crypto traders would want to connect to. At least certainly the ones that the larger ones want to connect to. BitGet we're connected to. One of your sponsors. Pretty much all the derivative traders. We do a lot of derivative trading. We have algorithms for people to do spreads. So you could trade, a perp on one side and spot on the other. You can do a pairs trade between a spot and a perp of a different instrument. You can do all of that stuff. We have people who use us to trade in and out of the CME futures or trade futures rolls. So every one of those combinations is what we do. So we basically try to take the complex and make it simple, but more importantly, get better pricing. Just here's a number for you. The average cost to trade, $1 million or a couple $1 million of Bitcoin, for example, from most sources. Most people would say it's somewhere between 10 and 12 basis points. That's generally what the thought process is on that. That's what most of the data shows. Our clients traded it between 3 and 5. So we save our clients in that particular case somewhere between 7 and 10 basis points, or not quite 10, 10, 12. We save 7 on the low end to like 8 or 9 on the high end. That's real money. Since we get paid a fraction of that. And when you get to less liquid crypto, it's kind of a big deal. So, for example, our DeFi platform is 5 basis points cheaper than using Uniswap's own front end, and allows you to trade TWAP over a period of days, even if you wanted to. So TWAP stands for time weighted average price. So we're really all about like making things simpler for people and helping them get a better price. And it's amazing some of the conversations you have. I mean, this may sound strange to you, but in every financial market that other than crypto, getting best price, i.e. minimizing your cost, is really one of the first things people worry about. In crypto, people tend to worry about more things like, oh, can I trust the person I'm talking to? Are they going to scam me? Are they going to run in front of my order? Are they going to do this and that? And the truth is both matter. And so understanding that and getting that education has been something we've been doing for over 6 years in terms of educating people about how the markets work.
Yeah, I love it. Great thoughts there, Dave. And look, I mean, just to take a step back, I guess, and provide a more high level overview. It's been a while since I've had, an algorithmic trading platform person such as yourself on. It's always good to get people's perspectives on, how they think about different algorithmic trading strategies and the philosophy behind them, and what you're essentially trying to provide for your client base of traders. So yeah, I'm sure you've got some hot takes, some philosophy to back up your thoughts. Please go
Yeah,
for gold.
the interesting thing is, and it's funny because here we are today, and every day for the last 2 weeks in the United States, every day, and it's not like this is not a joke. Every day for 2 weeks, between 3 and 4 o'clock, there's been a rally in Bitcoin.
Mm.
Now, we know why there's a rally in Bitcoin. You can't disguise the reason there's been a rally in Bitcoin. It's because the ETF complex has inflows, and they have to buy Bitcoin, and it's somewhere struck. A lot of that flow comes in between 3:30 and 4. And so they have to buy it. The price goes up, supply, demand. That's something you can't do a whole lot about unless you change the time of day or the way you do it. There's lots of reasons behind it. But what people don't understand is a lot of the volatility that we've seen in crypto, and it's not just Bitcoin now. Now we're talking everything from Ether down to WIF, right? Dog with hat, right? It doesn't matter. Happens because people are trying in the derivative markets to run in front of where they think demand might be. And so if you're a trader and you're trying to establish a position and you're trying to buy 10% of what typically trades in a time period, if you do it dumb, i.e. you let everyone know what you are doing, the price is going to move. So when I was at Citigroup, we bought a company called ATD. ATD standard for Automated Trading Desk. They had a team at that time, this is a while ago, they had a team of 8 people sitting in a room using a language that you probably not have never heard of because it's old, called Perl. And what they were doing is writing Perl scripts, and most of their strategies were trying to sniff out large buyers and large sellers. So they would like probe orders into dark pools to see where orders were. They would watch all the exchange feeds to say, oh, I think there's someone who's buying a large amount every 2 minutes, and they would then run in front of them. Well, there are thousands of people in crypto who are trying to write algorithms, trying to find people who are buying or selling. So what does CoinRoutes do? What we do is our algorithmic strategy we don't tell people what to buy or what to sell, Andy. But if you are buying Ether, and you need to buy over the next 20 minutes several thousand ether. We will take that order, you put in an order into CoinRoutes, and you can give it parameters. There's all sorts of different things, and anyone can look at our website or DM me on Twitter, etc. You can find out about it. But basically what we're going to do is at every single tick of the entire order book, we're going to reprice orders in small size designed to be both random looking and smaller than will influence the book. And so we're trying to fit liquidity into the market and mesh it together. And that allows our clients to save a lot of money. It also means that they're having less impact. And there's two different things, and that matters. So for Bitcoin and Ether, it matters. When you get to Solana, it can matter more. You get down to SUI and lots of other hot tokens, Injective. We've seen really crazy moves in a lot of these tokens. And a large part of it is because some investor or some trader decides to take a big position and they don't disguise it very well. And everybody piles in before they can finish. And that, more than anything else, is what we help stop. So we help our clients get their trades implemented better. And that's what we care about. And it's really, really interesting because when you watch the market and you look at the candles that we see, a lot of those candles are from dumb trades. So, I know it sounds, I'm oversimplifying it, but more or less we try to decrease the dumb trades to help our clients capture more of what they believe they need to capture.
Yeah, look, fascinating, Dave. And, because currency trading, doesn't matter whether it's stock trading, currency trading, or crypto trading, but, trading is an adversarial practice. It's a harsh environment out there. There are winners and losers. There's a winner on every side of a trade and a loser. And it's tough to beat the market, to beat other traders. And you kind of hinted at it, Dave. And in crypto, it's particularly interesting because there's so many different insights and metrics. There's so much on-chain activity that people can glean a little bit of an edge from, a little bit of an information asymmetry. Perhaps it just makes it a really fascinating environment for traders, doesn't it?
Yeah, I always make the statement to all the TradFi people who I talk to pretty constantly, and it's funny because they used to think I was a lunatic moving over to crypto 6 or 7 years ago. Now a lot of them just ask me about how can they do it. But one of the most interesting things is crypto, in particularly Bitcoin and other public blockchains, are the most transparent markets on the planet. Because as you say, the markets are transparent, all of them. They all have their order books out there for the public. They're not hidden behind these firewalls or with huge fees. And the blockchain itself gives you a lot of information about what's going on in terms of unique addresses and overall hash rate and basically realized profitability per address, all sorts of metrics that people can use to determine what is the state of the market and what is going on, to the point where it's very obvious that transparency has advantages. And to be honest, there's also issues with transparency maybe being, creating conflicts of interest so that firms who know who are behind certain wallets might have an edge. And so, you have to be aware of that. So like when you're trading with centralized exchanges, people say, oh, look at how much volume got sent to centralized exchanges. So what was the big story 2 weeks ago? Big story 2 weeks ago was, oh, we know this wallet's Grayscale. And Grayscale has sent this amount of coins to Coinbase. Well, guess that means they're going to be selling them. And so you would know that. And so people were running around trading that stuff. Is that bad? Is it good? I mean, I don't know. It just is. And whatever technology you're using needs to be aware of that stuff. And that's kind of your point, I think.
Yeah, it is, Dave. And also, in the sort of bad early days of crypto, if you like, and you could argue that we're really only just now coming out of the early bad days of crypto with all the bad actors. You think of SBF and what he was doing at FTX. Basically the exchange was effectively trading against its users. They could see where everyone's stop losses were. They could see, who wanted to trade what. They were effectively, they could sell paper Bitcoin to people and then use people's Bitcoin to prop up the FTX assets. It's pretty crazy.
I mean, I can't stress just how bad that was. You are absolutely right. You know, it's funny, for years, for over a year, FTX was gaining market share with all the professionals. And I had quant firms tell me the following sentence. And at the time, you know, I was like, okay, I guess. But the sentence was this: we know Alameda has an edge. We know it costs us a quarter of a basis point more to trade on FTX than it might with others because of Alameda. But there's so much liquidity there. We get so much capital efficiency there. It's fine. Our models are making enough money. Now, the person who actually said this to me, unfortunately, was one of quite a few companies that were our clients that went out of business because they lost so much money on FTX. But it's interesting how many people knew there was something sleazy going on and didn't care, as long as they were able to make an edge. And I think that's a large part of when you say crypto's coming out of it. I think at this point, people do care. I think people care about counterparty risk. I think people do care about knowing that the person they're trading with doesn't have an incentive to screw them. I think those things do matter, and they're going to matter more and more. And you know, look, we 2022 was a pretty horrible year, right? The FTX debacle was one of the largest financial crimes I have seen. And look, I knew the Madoffs. I mean, Mark Madoff and I went to opening day to watch the Mets play multiple times. He tried to hire me a couple of times. So it's like I've seen evil before. I've seen bad things before. This was arguably worse. But we can't forget the other shenanigans that went on in 2022, starting with Luna, then going to Voyager and Three Arrows Capital and Celsius. And of course, you know, we're finally through it, but the Widowmaker trade, the GBTC trade, going from a persistent premium to this massive discount that took out so many people in the space. This was could have, if there was not a really strong reason for crypto to exist, and I believe there is one, actually several, this could have easily taken the entire asset class out because of the harm and confidence. But yet, here we are a year plus later, and it's very clear that we're evolving in the right direction. Is it perfect? No. Are we moving in the right direction? Yes. And there are certain jurisdictions doing a better job than others, but we can see it. We can see it in data. So we calculate a lot of data. One of the things I didn't tell you is that CoinRoutes processes about 10 terabytes of data a day, of market data. And we track the cost to actually buy and sell fixed dollars of Bitcoin, Ether, and pretty much everything else. And we can watch these trends. And the cost to trade has gotten much less volatile, much more consistent over the last year. Actually, the biggest single problem in cost per trade over the last year was caused by the US government. When Signature Bank last year was torpedoed and Silvergate was torpedoed, and people couldn't move their funds around, it made it much harder to trade. You get much more volatility in spreads. But that is ending, and things are getting to the point where you can make a very strong argument. In fact, I think quantitatively you can prove it, that you can trade large cap crypto as efficiently, actually more cheaply or efficiently than you can trade large cap equities, which that's mind blowing to people in the old world, but it happens to be factually provable. So it really is a maturing business for sure.
Yeah, look, it really is, Dave. And I think, of course, you know, one of the biggest factors in that, of course, is the approval of the 11 spot Bitcoin ETFs in the US. And yeah, look, I want to get your kind of thoughts on this, because people can't underestimate how big a moment this is for Bitcoin. It doesn't need to be a big moment now. It's more about, you know, the long-term trend here, but just the amount of fresh, new, beautiful liquidity that really has the potential to flow into Bitcoin. The relentless, ongoing bid, Dave. What do we think is happening here? What could happen?
Well, look, I think it's extremely important. I think it's a massive narrative shift. I think if you listen to Michael Saylor over the last year or two, he saw this coming the same way, and more than I did, I suppose. But the fact is if the goal of Bitcoin is to become the measuring stick, the store of value for all currencies globally at some point in the future, in order to get there, the first step is for Bitcoin to supplant gold as a store of value. But people need to understand some things about gold. The first thing to understand about gold is, yes, it's been a store of value for 5,000 years. And before that, there was a couple thousand years where seashells were a store of value. But the point is, up until 1971, gold represented very close to 100%. The total value of gold was close to 100% of the value of monetary aggregates globally. When Nixon broke the gold window, and it actually started in 1913 when the Federal Reserve was established, but it became final then. Gold now actually, is now trading around 8% or less of global monetary aggregates. It might even be less now. I don't know. I haven't tracked it in the last couple of months. So, but becoming digital gold makes sense for Bitcoin because we are in a digital world where we need portability, transactability, verifiability, and low-cost proof of reserve. I mean, gold, let's face it, you want to have a lot of it, you got to hire guys with guns, put it in a very secure location. And there have been multiple examples where it's been led inside gold painted bars. So, you have people who assay it and check it and pay. You still have to trust people. Mark Yusko uses the words of Bitcoin is the technology of trust, is a technology of truth, excuse me. Sorry, Mark, if you're watching, which is far better than the technology of trust. You don't have to trust intermediaries. So Bitcoin makes a lot more sense for lots of reasons, but it is still a fraction of what gold is worth. So the narrative in the ETFs that's being told by the world's largest asset managers, and we're talking, BlackRock, yes, but also Fidelity and Invesco and many others. This narrative is now getting pushed to every single major asset allocator around the world. That is a major change. And so if the goal or if the thought is Bitcoin's adoption as a store of value is what's going to take it into the next level, which would be a 10 or 15 times price rise from here, and then we see whether or not it could go beyond gold's level. I mean, that's very high asymmetric upside with literally the best people to tell a narrative on the planet telling that narrative. So yeah, I think it's transformational. I think that there's a lot of skepticism in the crypto world. And so the skepticism in the crypto world is, oh, BlackRock's going to ruin Bitcoin. It's like, these people are nuts. They don't understand. They think Larry Fink is out there buying it. BlackRock is making a product available to millions of people. It's not BlackRock that's buying Bitcoin. It's Aunt Minnie in Minnesota, right? It's the various people who have BlackRock, have BlackRock funds. And that matters. So I do think it's a major, major deal. But it's also important to understand that it's a slow process. Half the investment banks in the United States won't even let people buy this stuff yet. I mean, I've famously been called Vanguard. Their denial of this is their Bud Light moment. I believe that's true. I think that they are really, if they don't fix this, are going to suffer. Now, are they going to suffer now? No, they're going to suffer in 6 months, a year, 2 years, when all their competitors say, well, Vanguard's great, except they didn't allow you to buy the best performing financial asset of the last 2 years because they decided that they were trying to protect you. That's going to hurt them. And that's the kind of narrative that matters, right?
Yeah, great thoughts, Dave. Couldn't agree more. And just speaking on the gold thing again, I saw a great data point today on Twitter, on X, from Eric, the Bloomberg ETF analyst guy. I'm sure you know who that is, but Eric was saying, yep, he was just pointing out that the net cumulative flows for the 10 Bitcoin ETFs has doubled in the past 3 days to get it's now over 3 billion. And for context, he said it took the gold ETF 2 years to get to 3 billion. So this has been like, what, 3 weeks? And
it's unbelievably successful by every possible metric. And people need to understand that this is a very slow industry to react. I mean, the big flows that you would expect to happen when asset allocators. So I don't know if your audience is aware, but there are these people who have jobs. There's 2 jobs, financial advisors and registered investment advisors. One basically advises individuals. The other gets pools of individuals together and directs portfolios. Virtually none of those have had the opportunity to even allocate 1% to Bitcoin in their core holdings. Hell, 2 days before these things were approved, 30% didn't even expect them to be approved, which means they haven't done no due diligence. These people generally need months to evaluate new investment strategies. And here we are 3 weeks in, and this is already what we're seeing. So it's very, very early in this process and could easily be more. And of course, what everyone needs to understand is this is not going to stop at Bitcoin. I mean, the rumors around, the Ether ETF and what that will mean is why, I mean, Ether had a huge reversal in the last couple of days. Bitcoin was really outperforming it, and today Ether's outperformed Bitcoin. And that's not that surprising, really. But is it going to stop at Ether? And the answer is no, it's not. Yeah, it may stop at Ether before the next election, but at some point, the entire asset class is going to become investable to the entire world. Right? Meaning, the people who can't do it now. And the trick is, look, we understand crypto. Look, I have multiple wallets, right? We all self-custody. We all understand that. The average human being, the average investor doesn't want that, or they're afraid of it. Well, certainly the people with money. The fact is the ETF wrapper gives people who have absolutely technophobia the ability to buy in. That exposure to the asset class is a big deal. And that's really what it comes down to. And a lot of the crypto people don't understand it because it really isn't that hard. I mean, look, I set up a ledger, I have a MetaMask wallet, I have a Phantom wallet, whatever. It's not that hard. But the truth is, try showing it to my wife, not going to happen. And so, and I'm not saying my wife, there's anything wrong with my wife. I think she's much more average than anything else.
Yeah, understand. Look, Dave, you mentioned the US election, and so US election is November this year. Famously, election years, of course, are volatile. And obviously, and traditionally, they're quite good for markets as well. Love to just kind of get your thoughts on any kind of broader trends that you're looking at this year, that the traders on CoinRoutes are looking at. What can we expect in a year of potential volatility?
I mean, look, I think we've talked about the bullish side, which is, on the book, Bitcoin, the flows, et cetera, the ETF. The election in this country there's just no nice way to say it. We are barreling, this is a train wreck that we are watching. I'm like most of the people in the country, I don't like either of the candidates we think we're going to have to choose between. If we in the crypto world, there are a lot of people, whether you agree with him on a lot of his positions, hope that RFK is a serious challenger. The reality is the thing that I most care about from a crypto perspective is not having a repeat of the current administration. Because whatever one thinks of Joe Biden, the human being, he ceded control of financial regulation to Elizabeth Warren and her people. And her people have been openly hostile to both digital assets and financial innovation in general. And that is a problem. So the real question is, if in fact we get a change from that, it almost doesn't matter in which direction we go. That's bullish for the crypto sphere. If in fact the current administration realizes that with the success of the Bitcoin ETF and with the amount of holdings, that 20% of American voters own crypto, that would be bullish for crypto, because we've heard nothing but hostility. Elizabeth Warren posting bills and basically making up lies in the Senate about how crypto is used for illicit transactions. I've had people from the FBI, I've talked with them, who basically all tell you they love it when the bad guys use Bitcoin. Hamas told their donors, don't use Bitcoin because it's easier to trace. And yet she keeps making these statements. But it's important to understand she's very powerful. So if you have someone very powerful making up statements that indicate that she's going to keep throwing roadblocks in front of crypto development, that's a bad thing. So I think that matters. But as far as the year plays out, I mean, look, this year feels a lot like 2000 to me. And in traditional markets, I think I'm much more bullish on Bitcoin than I am on the stock market for this reason. If you go back and research what happened in 2000, and that was an election year also, it was also after a ridiculously strong set of rallies, into the Y2K, which didn't happen, all the liquidity that the Fed put in, all is very similar. And we had a huge correction early in the year, which then reversed, but it was a big movement. And then, we had bad things happening toward the end of the year into 2001. So mostly 2000 had early volatility, a steady rally back, late volatility, and then bad things happen after that. Now, is that going to happen again? I don't know. I'm not a technician. I'm not a historian. I don't want to say it's the same thing. What I will say is valuations seem stretched on a lot of traditional assets. Whereas I just told you, I think Bitcoin is 1/10 undervalued. So I know where I'm putting my personal wealth to the extent that I want to save. I tell you, I won't use leverage on any of this because I do believe that for individuals using leverage, big problems. It's a very volatile asset. Professionals use leverage all the time for lots of really good reasons, but there's a big distinction there. So if you're asking me my crystal ball is we could have a murky, but tax season this year, March, April. We'll probably have it be okay through the summer, and then as the election takes shape, then we'll see. I don't want to make any predictions because it really depends on what happens.
Yeah, of course. Very good thoughts, Dave. Let's bring it back to CoinRoutes, though, as we start to finish off. One thing it'd be good to understand is, are there any jurisdictional restrictions in terms of, who is able to use CoinRoutes? Where is your audience based?
Well, that's a great question. Our audience is spread everywhere, mostly outside the US because most traders that are active are outside the US. Non-US funds tend to have more access. We do have a couple of US clients. We're a software company. So everyone that uses CoinRoutes or CoinRoutes, whichever I'm feeling on that particular day, anyone who uses our technology has their own accounts at Coinbase or with Galaxy or with Uniswap, or has accounts through prime brokers like a FalconX. And so you can use our technology with other people with those sorts of accounts. We don't get in the middle of those trades. That's how we can be a US company. It is entirely possible that we are in fact in the middle of looking towards international expansion. We've done some things and we're moving more, but the truth is that our best targets are in basically from Europe on towards Asia is where most of our business really is. I mean, we have some offshore and some of the islands here as well, but the fact is it's mostly international because if you want to trade on, on Binance, Bybit, OKEx, BitGet, you generally are offshore. And so most of our clients do that.
Yeah. Oh, well, thank you for clarifying, Dave. Yeah, and that makes perfect sense. Of course, you're just software and people will have existing accounts at, whatever exchange or DeFi platform or whatever it is that they want to use. And you're just another layer on top, helping them to execute or automate or whatever strategy they so desire. I thought it was interesting also, Dave. I think you mentioned his name at the start of the show, Ian Weisberger, which I guess is related to you. I believe Ian is your son. So you guys are...
Ian is my son, and he's the brains behind the operation.
Right.
He was the one who invented our patented architecture, which allows us to have centralized market data collections. We have a market data plant in Tokyo, in Europe, and in the US, but each individual box by each individual customer, he invented it. He's invented our new DeFi platform as well. So he's built a lot of this stuff, and he's very intimately involved in all this. He's actually in Dubai right now. So he was just at the Satoshi roundtable. So, we kind of divvy this stuff up. I'm letting him do all the fun travel lately, but we'll see.
Nice. Very nice. Look, would you you mentioned the DeFi stuff a couple of times. Just give us a sense of, what you guys are trying to build there, and look, anything else that is coming down the product pipeline at CoinRoutes.
Yeah, the important point about DeFi is so we've built our own smart contract that's audited that allows you to whitelist pairs that you want to trade, whitelist the DEX that you want to trade on, set a credit limit, and then you can send an order. So let's say you want to buy $1 million worth of some small coin on Uniswap, swapping out of Ether or USDC or whatever. You can do that and then enter an order into CoinRoutes to buy that $1 million over an hour, and it will send orders over time in order to match that, or it could be over days. And then let's say you want to sell it. Well, you still have that credit limit. You could then turn around and sell it. If you had used any other system, you would literally, if you're using a ledger, you'd be, approving every single transaction. Whereas a CoinRoutes, you do it once and you're done, and the algorithm can work. So you can react to price changes significantly faster because the system will be much faster. You can simplify your workflow, tremendously. We also have integrations coming up we're about to be announcing with several large, more institutional wallet providers where you can leave your coins in cold storage effectively and trade on these platforms. So all of this boils down to a simplification, but allowing more complicated trading to work without that effort. So that's a major effort of ours. The other major effort of ours is to build what we're calling our multi-tenant process, which is to allow, we're working towards a self-service portal for people who want to sign up to CoinRoutes and be able to do it easily and be able to have that software basically for their use, and to do so in a self-service manner, as opposed to right now we have a more expensive product because it requires us to support people through every step of the process. So we're doing that at that level of automation to be able to support people right now. If you don't trade 10 million a month, probably not worth it. Not that that's that much, but ultimately we should be able to handle people who trade $100,000 a month, and that's really the direction we're moving in.
Understood. Thank you, Dave. Well, look, as we finish off, then I just invite you to share any closing thoughts, anything else you'd like to say, and especially please do tell people who want to learn more, perhaps engage your services. What should people do? Where should they go to get involved with CoinRoutes?
Yeah, well, the best place is the website, www.coinroutes.com. There's specific landing pages for DeFi if you're interested in that, or in general. You can sign up for our mailing list, and we'll let you know as product announcements happen. You can request a demo, and someone will contact you, and we can show you the system. If you're an active trader, I think it's a must-do. You can follow us on Twitter at CoinRoutes, or me personally at Dave Weisberger1. I'm a little bit more outspoken because it's my own, as opposed to the corporate one, but we do tend to comment fairly often on markets and show possible trades and other things that we see going on. And so to me, that's probably the most important thing. So the best ways.
Awesome. It was a pleasure talking to you today, Dave. Had a lot of fun. All the best, and bye for now.
Well, thank you, Andy. Take care.
All right, there you go. That was Dave from CoinRoutes. CoinRoutes.com. Link, of course, is in the show notes. But yeah, great solution, really, for traders. If you need any kind of algorithmic trading strategy, man, looking through the website, they can certainly cater to you. Great to see. Yeah, Dave was fun. Great character. Yeah, fascinating, really. So thank you to Dave for coming on the show. Thank you to the CoinRoutes team. And thank you to you, the listener, if you're still listening or indeed watching here at the end of the show. This was the Crypto Conversation for Brave New Coin. See ya.